PayPal just got obliterated, down over 20% in a single day, seeing one of the worst sell-offs in its entire history. Wall Street thought the turnaround was here, but it wasn't. The stock saw a brutal earnings miss, a 2026 growth freeze, and now the CEO being out. This is not just a dip, it's a full-blown reset for the company. So is PayPal a once-in-a-decade steal, or the most dangerous value trap in fintech? Let's break down the data that triggered the panic. Now you may be asking yourself, why did the stock literally fall off of a cliff today? Well, it's because the heart of PayPal, its branded checkout, is in a death spiral. We've seen that branded checkout volume growth has slowed to just 1% in Q4, down from 5% just 3 months ago. As well, PayPal's transaction take rate dropped to 1.83%. Essentially, they are processing more money through low-margin services like Braintree, while losing the high-margin war to Apple and Google Pay. As well, they had their earnings miss. They delivered an adjusted EPS of simply $1.23, missing the $1.29 estimate. As well, revenue also disappointed, coming in at $8.68 billion. As well, the real nail in the coffin was a 2026 outlook. Wall Street was banking on an 8% profit surge, and management just gave them a growth freeze instead. PayPal expects 2026 profits to be flat to slightly negative compared to 2025. And even though the revenue is stalling, they are increasing spending on agentic commerce and AI by 3% just to stay competitive. As well, to stop the bleeding, they are purchasing $6 billion in shares this year. And at these prices, that's roughly 15% of the entire company being retired. And to add even on top of that, in a shock move, Alex Chriss is out after only 30 months. The new leader will be Enrique Lores, the current CEO of HP, which is going to take the helm on March 1st. As well, Lores is pivoting to physical retail, as PayPal is launching NFC mobile wallets in the UK and Germany this year to bypass Apple's fees and fight them at the actual store register. As well, for the very first time, PayPal is paying a 14-cent quarterly dividend, and this could be seen as a sign that PayPal is now a value utility rather than a high-growth tech darling. So now that we've covered the most important fundamental news, let's take a look at the chart because it's getting extreme. So now that we got that out of the way, I just really want to reiterate the overall trend on PayPal. So to that, I'll be using a weekly chart because the trend is so heavy to the downside here. So first of all, we do have to account for important areas of supply, right, resistance, and demand. So what I'll do here is simply plot a swing high anchored VWAP here for the most important high that we ever formed on the stock, which was here on July of 2021. And ever since then, we haven't been able, so over the past 4 to 5 years, we haven't been able to get above it. And we see that every single rally that we had, the most aggressive one being here at this exact day here on January of 2025, so around a year ago, that is where a lot of sellers came in and they just piled on the stock. You know, they just initiated more heavy downside here. The thing about PayPal is that they're just seeing more competition, and this hasn't allowed it to really sustain itself, right? It's just been seeing low after low, and institutions are heavily piling in this name aggressively. I do believe, though, that on the overall short term, there will be continued selling, and we simply saw this, right? After earnings, it's down 20%, right? Another indicating an important factor here is that the investor sentiment is so negative on this name that if we plot a VWAP from the IPO, right? So from the initial public offering in 2015, and we, kind of getting the average price, so kind of seeing where the average long is located relative to that price, we will, plot it as green to signify the people. And we are well below that price here of $92. So people who were long, think about this. Take a moment to think about this. People that were long since 2015 are down more than 55%. So over the span or the course of 10 years, there hasn't been a single return, and they're actually losing money. So what this gives to show is that this name is going to be continued heavily towards the downside, and the only way to truly find support on this level is going to be at the lows here that we've seen around there, this support of around $34 and the lows of around $30. That would be the overall areas of support where I see the stock bouncing. And if we do bounce, it would be very, very aggressive, right? Because if we look at the short flow, it's very, very high, and we could see a rally towards areas of resistance here, some profit taking of $94. The overall longer term trend would be looking like this, so higher highs, higher low formation, and we slowly start to rally towards those levels of resistance. And this is only going to be the bullish case, right? If we do tend to find buyers at this zone, which is very, very unlikely because the overall trend is still towards the downside. We also do have to consider that the volume here is very, very aggressive towards the sell side. We've been seeing nothing but increasing on the sell side, and the selling really accelerated here on the earnings date here of July 2025. Here we saw this very important overall candle, and then this enormous candle here on the past earnings, right? And we don't even want to mention the most recent earnings here coming in with the same magnitude as a prior selling volume here. Something that I really don't understand here is that the company is still valued at around $39 billion, yet its revenues are slowly starting to decline and kind of flatline. If we look at their earnings, they did do a pretty good job of beating the expectations in Q1 of 2025, and it was the most recent here, Q4 of 2025, where they just couldn't sustain the estimates. They came below. They are offering a dividend, but I don't think that's enough to really save the stock. Now let's look at PayPal's actual financials. And I know many of you guys have been asking me, is PayPal a viable investment? Is it a value investment now that it's been heavily triggered toward the downside? Well, simply looking here at the facts, right? Their PE ratio here is at a 7. That is extremely low. And it's just, gives to show that a lot of investors are, accounting for the deceleration of growth within the revenue. Their profit margins are extremely low, coming in at 15%, operating margins at 18%, and we only saw quarterly revenue growth around year over year around 3%. That's very, very low. Obviously, if you look at the revenue, extremely growth, it's been growing at 4%. And like I said, very high quality companies have to see growth above 10%. We are barely, with PayPal, outpacing inflation, coming in at 4% growth. That's not good as a longer term investment unless PayPal is able to re-accelerate that, and that would be a repricing of the overall stock with multiples expanding. As well, if we look at the key metrics here like active accounts, they've been flat ever since here Q2 of 2021. They really haven't grown, right? It's just 1%. That's very, very low. It's less than 3% here, which is not good. Now, transactions per active account has been on the decline, down 4% year over year, and we saw this decline beginning to occur here on Q3 of 2024, and from there it's been nothing but downside there. In PayPal, and this a very important KPI to look out for, and seeing that decrease kind of reflects the overall stock price. If you look at their EBITDA as well, it's been growing at a very slow pace at 6% year over year. We do not want that. We want to see above 10% growth, and usually EBITDA should grow faster than 10%, especially a little bit faster than their overall EPS. But like I said, with revenue growing slowly, it's very difficult to expect a growth in the EBITDA because it kind of gives to show that they are not expanding or acquiring new clients through that revenue growth. Simply, net income is obviously increasing. This is the only positive metric that I see in PayPal, growing 26% year over year. It's been accelerated over the past 2 years. It grew at 11%, but now 26% year over year, which is quite nicely here for the company. If you look at their free cash flow, it's been declining, down 11%. But what I really don't like about PayPal is that they have a very high stock-based compensation compared to the free cash flow, right? So free cash flow is coming in at $5 billion, yet their stock-based compensation coming in at $1 billion. So there is that extreme ratio between those two metrics, which I really don't like about the company, particularly coming here from PayPal. If you look now at their cash and debt position, they were doing so well back then in 2019. They just acquired debt more and more and more over time. I just didn't really like that. We saw that very big growth here in Q1 of 2020. and they've just been acquiring that debt. They've been paying it off slowly. It's been declining, but there's been quarters where the debt has been very, very close to the cash reserves, and I just don't like that about a company. I like to see a company when it's looking like this, very strong cash positions and very low debt, which would be the ideal, especially in this name really shouldn't have a lot of debt. It's a software. They really don't have any retail. It's not manufacturing at all. So I really don't understand why they have so much debt piled up. Yeah, like I said, just something that I don't really like about the company there. If we look at their shares outstanding, this has been declining, which is good. That means they're buying back shares and, making the shares more valuable to investors, current investors. But, the main reason as to why they're buying these shares is just to kind of inflate their EPS, because they really aren't growing revenue. So they pretty much are just kind of inflating the EPS growth rates by buying back an aggressive amount of shares, which is really not good here for PayPal. If you look at the ratios, the gross margins have been on the decline, right? They haven't really been growing. They still have a nice gross margin of 47%, which is not bad. Really, really good. If you look at their operating margins, simply they've been declining, which is not good here for PayPal. Profit margins really are on the low side, around 16%. Generally, companies that are really towards software have higher, and they should have higher profit margins, coming in around above 20 to 30%. But PayPal has around half of that, which is just something that I really don't like here with PayPal. If we look here as well at their expenses, they have been kind of stalling about CapEx. Generally, what you want to see in a strong company is growth across revenue, across EPS, EBITDA, free cash flow, especially free cash flow per share, which really gives that sustainability and confidence for existing shareholders, as well as rising CapEx over time. Obviously not too aggressive CapEx, but CapEx that expands over time, because it shows that they are heavily reinvesting in the business, finding ways to grow the revenue, the top line, and consequently, if they can manage that top line growth while sustaining lower expenses, then they would increase their margins, have margin expansion, and that would lead to higher multiples in the stock, leading to an increase over time. But now PayPal isn't really seeing that, and from what my standpoint is that the actual stock price is truly a reflection of the financials of the company. And unfortunately for investors, I wouldn't really recommend buying any more shares at all. I would kind of liquidate the position and look for other opportunities within the market that are seeing, a lot of growth. When it comes to the financials, recent like Meta, really important company. If you guys want me to do a meta analysis, like this video and comment down below meta analysis, and I'll do a complete analysis looking at the numbers, everything. We'll ignore the major sentiment and look at the actual data, what the numbers are telling us about the company, So apart from that, I am rating this stock a sell. Overall, PayPal is now a show me story. You're buying a legacy leader at 9 forward earnings with a new CEO and a $6 billion buyback. But you're also fighting Apple and Google for every single cent. The question for you is, are you buying this blood in the streets, or is PayPal the next value trap of 2026? Drop your price prediction in the comment sections below, subscribe if you haven't already, and I'll see you guys in the next video.